What a day for the stock market today, guys. Holy crap. It's currently about 3:40 p.m. on the East Coast. We had the Fed meeting just wrap up about 10-15 minutes ago, so we got to talk about that in this video. We have to break down what the stock market's doing, and we have to go over charts I like and stocks I'm looking at, so sit back, relax, get your free money from Moomoo, use my link down below, deposit at least $100, and you get one free share of NEO, which I think NEO today alone's up 25%. All the Chinese stocks are crushing it. So if you want a free share of NEO and you get up to 5 other stocks, each of which could be valued up to $3,500, use that link down below, get your free money from Moomoo. And with that being said, let's break down what the heck is going on. So like I mentioned, it is about 3:40 p.m. on the East Coast right now. We have the S&P 500 up 1.6%, Russell's up 2.4%, Nasdaq's up 2.8%, as we have the Dow up 0.9%, and the VIX is down 10.7%, now back in the mid-20s, just like that, guys. If you all remember, the VIX was what, in the mid-30s a couple of days ago? Let's pull this chart up and see. VIX was at, where was it? Yeah, just 34 literally yesterday morning, and just about a week ago it was at 36. So the VIX has come down a huge amount in the past couple of days. Gold is down a good chunk, silver's down, and of course we have crude oil, which is in a bear market. Believe it or not, crude oil is now down from 130 a barrel. It's sitting at 95. It is down 27%. So we had a huge pop in oil, but it could come down just as quick, as we clearly have seen over these past couple of days. So let's break down what's going on. If I pull up SPY again, we have about 20 minutes left in the session, and unless anything crazy happens, we're going to end up having a fantastic green day today. So right now, what we're noticing is we're right towards the top of the wedge. We have not completely broken out yet, which is why I still have my alerts set at 435 and 440. One thing we're also noticing here is we are trading above the highs from Friday pre-market. We were right around 432, 433. We broke those highs earlier, and now we're trading above them, so that's a very good sign. Now, all we have to do is take out the highs from earlier. Baby steps here, guys. We have to take out the highs from earlier, which were at about 434, and you guys can see that was before the Fed meeting. Once the Fed meeting kicked off, we had a big sell-off down to about 424, so this thing dropped 2.3% intraday, and then as the press conference, the Q&A started to go, we got that V-shaped recovery, right? This thing went from 424, now it's trading at 432. So let's wait and see if we take the highs out from earlier today. If we break above 435 to 440, that's where the real breakout could occur. And we are going to take a look at this Fed report in a couple of seconds here, guys. Let's just break down the indexes first very quickly. So triple Q, same thing. We were at 338 earlier in the day. Fed meeting kicked off. This thing dropped $10, 2.7%. And then we got that crazy V-shaped recovery as Jerome Powell was, giving questions and doing the Q&A, all that good stuff, right? So we're noticing, again, V-shaped recovery. If I pull up the 20-day chart like SPY, this is still well within the downtrend, not breaking out yet, and we got to break above 340 for us to even see any sort of a breakout. So let's pull up right now the Fed report and break down what is going on as of now based on what I'm seeing. Alrighty, guys, so let's talk about the Fed meeting very quickly in this part of the video. So we got a 0.25 percentage point rate hike, which we all knew for the most part. All of us, we knew that was going to happen. That's the first increase since December 2018, which you guys remember back in 2018 where the markets were really, getting hit. If you guys remember that, markets were down a good chunk, but that's a whole different topic for a whole different video. So what you're looking at right here is the FOMC participants' assessments of appropriate monetary policy, the midpoint of target range or target level of the federal funds rate. So we have 2022, 2023, 2024, and the longer run. That's what you guys see on the bottom here, and on the side, we have the percentage points, right? So most people in 2022 in the FOMC, the participants, right, they believe the federal funds rate in 2022 is going to be anywhere from 1.75 to about 2%. So in 2023, most people think it's going to be around 2.25 to about 2.5%. Then we have 2024, which is pretty much scattered between 2% and 3%. Not many people think it's going to be more towards 3.5%, 4%, which I guess is, it makes sense. I mean, I don't think the Fed funds rate will be over 5%. I mean, they might need to do that. Who knows? That would be very bad, I think, for the overall economy economy, the Fed, the government, but we're not going to get into that in this video. But most of them think, okay, 2-3% Fed funds rate in 2024. And of course, the longer run goal, most of them are right within 2.5%. And then this right here shows the distribution of participants' projections for the change in real GDP from 2022 to 24 and over the long run. So in 2022, most participants see around 3 to 3.1% change. In 23, they're all around 2 to 2.5, actually more like 2.2 to 2.5%. In 2024, they're mostly at 1.8 to 2.1%. Longer run, right around that 1.6 to 2%, that general area. And if we go down a bit here, we see the unemployment rate, which I don't really want to focus on in this video. Now, here's what I do want to look at. This is the distribution of participants' projections for PCE inflation 2022 to 24 and over the long run. So for 2022, most of these members believe PCE inflation is going to be anywhere from 4.1 to 4.4%. Right now it's sitting at, what was it, 7.9% or something like that. So most of them think it's going to be anywhere from 4.1, 4.4%, and there's one or two people that believe it's going to be 5.5 to 5.6%, and that's for 2022, guys. And as you guys see the years progress, 2023, most of them are right around the 2.3 to 2.8% range. 24, they're right around 1.9 to 2.2, 2.4 roughly. And of course, the longer run target for inflation from the Fed when it comes to inflation is 2%. So that's the longer term run here for PCE inflation. And if we look at core PCE inflation, which is right here, this excludes food and energy, right? This takes a look at 2022 to 2024. So 2022, we see most people around 3.9, 4.2%. 23, everybody is clumped between 2 and 3%. And then in 2024, pretty much 2.2 to 2.4%. That's where the majority of people are when it comes to core PCE inflation. And one thing worth mentioning, guys, when it comes to these economic models, we could look at them all day and see where the heads are, where the FOMC participants' heads are, what they're thinking. But at the end of the day, nobody knows what the economy is going to do. Even Jerome Powell said it today for himself, guys. Even these inflation numbers, think about it. If you watch the meeting today, he said back in December, he projected and his team projected the numbers for inflation, right? And whatever those numbers were. We're not going to get into it right now. But now in March, the projections are a lot higher than they were in December. So that's a perfect example as to why things are unpredictable. You can make projections 3 months ago, and then 3 months later, your projections are different because everything's changing. Nothing is really predictable at the end of the day. So take all of this with a grain of salt, but that's what's going on right now. We have a lot of inflation. It doesn't seem like it's going to slow down, over the next couple of, months, year, 2 years even. It's still going to be very elevated, and we got to keep that job market strong, and we got to try and steer clear from stagflation, guys. That's a real risk right now. Stagflation, we might even be seeing some stagflation right now, but we do not want to get into that kind of economic environment. It is not pretty whatsoever. So let's break down some stocks now and see how the markets are reacting as we are about to close in 9 minutes from now. So let me switch off that Fed presentation or PDF, whatever you want to call it, and let's take a look at what's going on in these markets. So it seems like we're up even more, guys. Look at that. Triple Q's up 3.3% now. It's ripping even more into close. It looks like we got a blow-off top rally. Let's see what SPY's doing. SPY's probably up a lot now. It's up almost 2%. We're about to take the highs out from earlier today. We're about 50 cents shy. I would not be surprised if we did take those highs out heading into close on a blow-off top rally. So markets are crushing it. Let's take a look at some of these stocks that I'm looking at. The first ticker I want to share with you guys is JBHT. Let me pop this up. JBHT. This is JB Hunt Transport Services. This stock hit my one scanner today. It was up, well, it's still up 9.5% as we're about to close in 8 minutes. Markets close in 8 minutes. JBHT's up 9.5%. It's completely breaking out. The ascending triangle is playing out here. We're above both moving averages, and it looks like it's in uncharted territories. And it might actually be at all-time highs. Let me double check with you guys here. It does seem like it is at all-time highs. So I wouldn't necessarily rush into it here, but now that we're seeing the ascending triangle play out, we're breaking out. Clearly, there's bullish momentum. We got to watch for some sort of pullback within the overall breakout. That could give us an entry point. whether it's $210, $212, $215, I don't know. We have to wait and see and give it some time. So we're breaking out. We got to give it a couple of days, maybe just a day or two, not even a couple of days, maybe just a day or two. We'll see how it plays out. So that's JBHT. Another one that I'm looking at here is Charles Schwab, guys. Let me show you this. SCHW. Let's pop that up and see what's going on. Charles Schwab is up 6.5% today. We have a breakout above not only the 50 moving average, which that happened a couple days ago, but also the 180 moving average. Yep, we broke out of both moving averages on the 4-hour chart, and we solidified a higher low at about $75. Uptrend is holding. Now, at this point, guys, we have a straight shot to about $95 a share. That's the next main resistance, which now that we're above the moving averages, I mean, I don't see why it can't get there in due time. It's not going to get there in a day or two, or at least I don't think it will, but over the next couple of weeks, definitely possible. Charles Schwab to get back up to, $95, $93 even. So keep your eyes on it. It offers about $5-7 upside, or in other words, about 8 to 7%. So that's Charles Schwab. Another one that I'm looking at, which is taking a beating right now, and a lot of these defense stocks is Lockheed Martin, LMT. This is down 6% today. We have oil down, we have gold down, silver down. I mean, a lot of these stocks and the commodities that were doing very well as we saw that huge surge about a week ago, they're all getting hit. Lockheed Martin's one of them, and we can continue talking about other ones that got hit. But this is the main one, and we'll talk. I think I have one more on this list. Yeah, LMT is the main one. So today it's down 6%. We're officially now down probably 10-15%. Yeah, about 13% from that recent 480 high. And what do you see, guys? What do you see? We are right by the 180 moving average on the 4-hour chart, which has held as support pretty much since, when was this? The end of 2021. That's when people started flooding money into Lockheed Martin. It was way before Russia-Ukraine. Russia-Ukraine just accelerated this. Now we pretty much gave back all of that gain as we've sold off 13%. But this was running up before Russia-Ukraine. Look at this. I mean, Lockheed Martin was up 18% roughly before the 24th of February. So it was already up 20%. And then once Russia officially invaded, or they bombed or attacked or whatever they did that day, it went up another 20%. So this thing ripped. It's pulling back. Healthy breather. Let's see if buyers step in. Another one that I'm looking at here is GD, which is General Dynamics Corp. Very similar to what we saw with Lockheed Martin. It shot up on the 24th, roughly, right? From 219 to 250. It ran up 16%. Now we are down 4% today. And overall, we're down about 12% from that recent 254 high. And this looks good. This chart looks fantastic, quite honestly. This has been uptrending for a few months. And as long as we hold the 180 SMA 220, 225, which is where we are now, and we've held this many times during pullbacks recently, as long as we hold this level, there's going to be potential for a breakout. We just have to wait for buyers to step in. So that's GD. Another one that I'm looking at is Walmart, ticker symbol WMT. This is seeing a bit of a resistance right now at $145 a share. That was resistance in the end of November, early mid-December, and even in January. We struggled at about 145, 146. Now again, we're struggling there yet again. As you guys can see on this intraday chart, we hit that point earlier this morning. We got rejected. So overall, if Walmart breaks 146, I'm going to put my alert right there right now. If that point breaks, we have a wide open gap to about what? $152, $153. That gives this a good 3 to 4% upside. So Walmart, watch out for it. Again, just to run through these stocks: JBHT, Charles Schwab, Lockheed Martin, GD, and Walmart. Those are 5 stocks that you guys should be watching right now, at least in my opinion. And I'm not telling you to buy these. As always, I'm not a financial advisor. I'm just telling you what I'm looking at in these markets, charts that I like, and those are a couple that look pretty decent. So So that's it. Markets are about to close in 2 minutes. I hope you guys enjoyed this video. If you did, hit the like button, subscribe, drop me a comment. Feel free to join my Patreon if you want all my real-time buy, sells, call-outs, morning videos, plus more. That's linked down below. And don't forget to get your free money from Moomoo. You get 1 free share of NEO guaranteed, which again, NEO today is up 25%. We have a lot of these Chinese stocks ripping. What a freaking day for the Chinese stocks. So get your free share of NEO and you get up to 5 other stocks, each of which could be valued up to $3,500. Use that link down below, deposit at least $100 and you get your free money. That's it. It's free money, guys. Get your money. I'll catch you all in the next video. Thanks for watching as always. Peace out.